Hump of the week, Wednesday, Business Express on Smooth 98.1 FM. I am Rotus. Hello, hello, hello. I am joined by one of my favorite economists and financial analysts in the entire Nigeria, in fact, across Africa, Mr. Wale Okurinboye, the head of investment research at Sigma Pensions. Sir, you are welcome. Good morning, Wale.
Thank you. Good morning,
Hey,
Rotus.
good to have you. Good
Thanks
to have you.
for
Yes,
hype,
yes, yes.
hype.
Lots of hype, happy. Lagos, do join us 0809 on WhatsApp. We are streaming on YouTube, youtube.com/smooth91. Also, hit us up on Twitter at smooth91fm. And yes, we're ready to go. Lots to talk about. Okay, well, let's start with some financial results, some performance here. Let's start with the personal care industry. Unilever, their full year results. So, wasn't looking too good, but please give us your take on how they performed.
Yes, so they posted a loss. I don't think the market was necessarily surprised by that because if you saw their run rate from their third quarter numbers, I mean, look quite terrible. So I think Unilever posted a loss, and most of that just reflects the fact that people just sort of think that Unilever has been caught up in the what you say wrong footed by what you're saying, a shift in the consumer space. So people are moving more towards value goods. And Unilever tended to play more on the premium price segment. So most of their goods were more at the premium price relative to where the market was going to. And you're also seeing more of these small, nimble, cheaper priced basic healthcare, basic products that people use, soaps and things like that. So they've been pretty more caught out in that race. And importantly is that for the last 4 years or 4 to 5 years, they've pretty much pursued a strategy of trying to push more of their sales through their suppliers by more favorable credit terms. So because we're giving more favorable credit terms, they were not able to pretty much see that the market had moved. Of course, after a while, that strategy pretty much was
caught up with them.
yeah. So that's what you see. And so last year they stopped giving favor, so they tightened credit terms, and immediately you just saw the plunge in sales. So sales dropped from to about 9 billion a quarter. That's what you're seeing is that it's now almost difficult for them to, at almost all levels, we're pretty much posting losses. And so
When you say, just to help our listeners, and when you say credit terms, you're talking about extending credits to their suppliers, yeah? Okay,
not
okay.
their suppliers, their distributors.
The distributors, okay.
Distributors, people who push their
That sell the
sales for
products for them.
Yeah.
And if we take a step back from just from Unilever and look at the wider sector for personal care and all those products, is that something that you're seeing across the board where Nigerian consumers seem to be moving towards more, more affordable brands than the premium brands? Is that what you're seeing?
Yeah, man, with pretty much people disposable incomes have been hit in the last 4 years because of the inflation we've seen, the high inflation rate, and following the Naira devaluation. So I think what that has meant is people are more price sensitive, and I think what that has meant is that, and then importantly is that that also occurred at a time where you're finding more smaller companies that are coming up with these very basic things, no frills, no trills, just basic, affordable, and able to do the job. More functionality over
the premium brands.
And so the premium brands, however, have not been able to respond by either bringing down their prices or introducing more goods towards that segment. And what they've seen is they've been cut off in that.
Interesting.
In that shift, yeah. So you look at it, even PZ as well, and some of the other companies
in that sector still facing the same thing. Is that a similar conversation with the brewery sector? Because I've also, in the past there's been talk of, even with the breweries, the brands and alcoholic segment, because the consumers moving towards that area. Was that similar story or?
It's the same story.
Same story.
So people are moving towards affordability, as you said. So what you're saying is that those guys who have more, the brewery companies that have more of those affordable brands, more of those value brands, are pretty much the guys who are winning. So, and then importantly, the industry has also seen the entry of international breweries who want to gain market share.
Right.
So because they want to gain market share, and their main products are pretty much what do you call premium value beers, Trophy, and those other brands, Hero, and so those beers are cheaper than. And so what you've seen is that for some companies that have not been unable to adjust, like Guinness, they've been caught in that way. Whereas Nigerian breweries has pretty much tried to be able to, because Nigerian breweries pretty much has products for almost every price point. And so maybe they are able to go, but international breweries is pretty much eating market share.
Yeah. So if you are going forward now, I guess if for the personal care brands, breweries and so on, if the premium players, if they want to adjust, it looks like they'll have to. I mean, if you were to look forward, they have to like eat these losses in order to. Can they afford to reduce prices going forward? Is that not going to cost them down the line?
Unfortunately, it's also coming at a period where VAT is going up, all kinds of things are going up on the local side. So I mean, they'll be under pressure, significant pressure. So what you see is that either they lose market share, and then their margins also come under pressure because I mean some costs. I mean, if VAT is going up, you have to find somewhere to offset that.
Right,
so
right.
you may not have the much leg room, I would say, to be able to reduce your prices to respond, or you just have to introduce
Other
products
products
at
that
more
cheaper prices.
Yeah.
Interesting
Tough one, actually.
interesting thing. Okay, let's go from personal care and breweries to telecoms. Airtel, they also released results. I believe it was yesterday or the day before. Different story. They looked like that looked good.
Yeah,
Yeah.
Airtel delivered pretty strong numbers. I mean, yesterday, and most of that is driven essentially by Nigeria, which continues to drive revenues in Nigeria are up almost 25%.
Mm.
That's on 9 months basis, and the key story they really is their data revenues. I mean, they're growing data revenues almost 75%,
Wow.
and that's pretty much because in the 4G LTE race, they've pretty much been the ones who rolled out quicker relative to their competitors, and I think that's helping them. Their margins are also EBITDA margins are
Looking good.
slightly better. Yeah.
Now, and I believe with the whole central bank and others trying to push financial inclusion, and also in the telecom sector, we're hoping with more Nigerians getting more smartphones. Is there still do you still see growth with regards to data going forward?
So you also saw Airtel during the period introduce a TV station.
Yes,
TV.
the streaming service.
Streaming
Yes.
service. So again, that's just because Nigerians are consuming more and more data.
Right.
So I think they're just keen into that. Mobile money hasn't really kicked off for them because the PSB license hasn't come through. But they've been quick enough about that. So they have partnerships with Echo Bank, as well as they've also got something with MasterCard, and then they signed something with Finbal, some global money market agents. So what they've done is that they are pretty much, so even if Nigeria doesn't work through, at least within the African space, they're pretty much able to sort of provide that digital financial services to customers.
So telcos, you see, telcos as a competitive sector as far as these players are concerned, MTN's, Glows, and Airtel's of the world.
Definitely, they have what it takes. I mean, they have they have more retail customers than banks have. So I think there's definitely more potential for them.
Interesting stuff. Good stuff. Okay, let's move to this Bloomberg article that I think came out yesterday. The headline says, "No one wants to be a Nigerian stock trader as volumes plunge." Can you help us out what they were talking about with regards to I think it was the number of dealers that came on board last year. So what's going on there?
Yeah, I think the equity markets, the brokerage businesses in Nigeria have been really, equity brokerage business generally has been under quite a number of pressure. And that's primarily because last year volumes traded actually declined significantly. And foreigners are a large portion of equity market trading. And so once foreigners generally reduce their activity on your bourse, what you generally see is that will weigh on overall market trading volumes.
Yeah.
And so what you're seeing is that last year, I think we traded 3 to 4 billion naira a day. I mean, in dollar terms, that's probably, we're probably trading some days less than $10,000 a day. And so,
wow.
Thank you. So what that means is that it's really tough to do a lot. They do a lot. And so for a lot of brokers, the article is talking about them going to West Africa. I mean, the whole West African link that allows you to buy stocks even though you're in Nigeria from Ghana.
Right.
You'll find less brokers willing to do that because it's almost a worse picture in these other markets as well. You also have the same very thin volumes going through these markets, and so many people are sort of saying, what's the point? What's the stress? Yeah. Why?
Okay, so if I try and link this to what the central bank did with as far as Omo is concerned, pushing out I believe it was PFAs and look out, and the talk that those funds will flow into the equities market. And the market is not doing bad. It's still up about 9-8% or even 10% so far this year. Do you see that possibly pushing things up? I mean that's not a fundamental argument, but I guess it's a more policy. But what do you think? Do you think that's going to improve things possibly this year?
Yes. So I think you're right. That technical dislocation of liquidity from fixed income generally is going to have to find its way into some other assets, and because the government isn't issuing as much, the government isn't borrowing, or rather their own issuance is not able to absorb what's maturing. What you see is that some of this money is going to have to flow into equities, into all asset classes generally. So certainly you could say that liquidity is what's finding some of that liquidity, even, and just because of the number of trades, like I said, the low level of trades that take place. So even if you only need just very small portion of that liquidity
To-
flows into the equity market, it's going to
push
drive
it up.
going to push up price. So I think that's what we're seeing. As long as that instrument shortfall remains, then I think you'll still find the equity market supported. Importantly is that from a valuation perspective, Nigerian market trades at quite low P. I mean, we're trading almost 5-6 times last year. So dividend yields there look quite better than what you get on interest rates. So it made sense for.
So there's an argument for some upside.
Some argument for short term. Yeah.
Cool. Okay, now since I already mentioned the central bank, let's. I think we talked about this on Monday, but I really want to get your thoughts on the outcome of the monetary policy committee meeting and the increase in the cash reserve ratio a bit to 27, 27.5. Okay, so what do you think? Because there's been a lot of chatter as to as to why the CBN did this. That the chatter is outside of what was in their committee. But what are your thoughts as far as that's concerned?
So I think there are two schools of thought as to what the central bank has been trying to do in the last 3 to 4 months. Essentially, there's one school of thought that says, okay, you know what, this is part of an elaborate grand scheme to try and grow private sector credit, so bring down interest rates, and so by kicking out local investors from that market, they engineered a collapse in interest rates. So, and they've excused that, look, this is part of a deliberate strategy to grow loans.
Right.
That's why we've increased LDR to try and get banks to lend. There's another school of thought that believes that this is also that's not really what's going on here. What's really going on here is central bank has an issue on its balance sheet.
Yes.
It's mobilizing, it's issuing almost at 15 to 15%. And it's also lending some of that money at very low rate. So it's not earning enough spread to pay for that. So it's running a negative spread on its balance sheet.
Right.
So that school of thought believes that essentially what the central bank is trying to do is just reduce how much it's having to pay.
Right.
And I think with this CR action, pretty much that school of thought, perhaps I would tend to agree with it. Because, I mean, they said taking the CRR, they are raising the CRR to take out liquidity, but they created the liquidity in the first place.
Right, exactly.
By doing that. So you should have known when you're kicking out local investors that liquidity was going to come and you're going to have to find a home. So you're now saying you're taking out that liquidity, by raising CRR, taking out liquidity is running against your original view that you tried to bring that you were using that liquidity to try and force the interest rates. I mean, I think more likely what's happening, central bank is trying to switch its liquidity management from one which uses OMO, which is quite expensive for them because of that on the balance sheet, to a zero cost liquidity management scheme, which is what they're using the CRR. I mean, today, effective cost of cash, I mean, what you're saying today is that cash reserve ratio is 30%. So what that means is that almost a third of banking sector deposit, every bank goes to mobilize deposit, is earning zero.
And that's a loss to the banks, right?
It's I don't know. And important is that let's ask ourselves the counterfactual: would the central bank ever bring down CRR? It appears unlikely, because they are not going to be willing to handle that much liquidity.
Right.
So I think what's happened is they've pretty much tried to switch how they manage liquidity from OMO, which is quite expensive for them, towards a zero cost approach, which is CR. Unfortunately, CR has implications for the banks. It makes the banking business not
so attractive. And so and we're just talking about the equity markets now, and we've talked about financials for personal care, telecoms. Would you now see pressure on banks going into 2020, depending on how long the central bank can maintain this liquidity management technique that they are using?
The business of banking is taking money from
you and I,
and finding a way to lend it. So if you're saying that even though I'm taking money from surplus units, I can only hope to make business on 70% of that against the 100%. That means my ability to generate much revenue is reduced. It's much capped. And importantly, if you look at what they've done with LDR, pretty much they're trying to reduce how much banks could pretty much go to those owners. So I would say, it's going to be a tough year for banks generally. I would say.
Okay, so you know what the overarching, I guess, topic of what they're trying to do, what the central bank has been doing is essentially trying to. The exchange rate has been behind most of this.
That's always what it comes down to.
Exactly. The exchange rate. So that looks it. I guess can one say the devaluation topic is off the table, because if they are adopting this stance, that means that they are ready to go in for the long haul and they will not devalue for the
Naira exchange rate is never really about fundamentals. It's more always about the desire of policymakers to keep it at the level, and always that desire is always a function of how much they have the ability. I think given where reserves are, you could say maybe they could last for the next 6 to 8 months. I mean,
Mm.
I think that, I mean, if the external conditions remain favorable,
Right.
prices don't go towards 50, I think they'll probably be able to do that. But if we see a deterioration in the external environment, oil prices, I mean, we've seen them shake in the last few days because of the coronavirus. If they do go weaker, and apparently if anything deteriorates on the external environment, maybe foreigners just lose hope in or lose interest in Nigeria, then
Right.
you could see reserves move significantly towards the 30 billion the senior bank governor was talking about. And I think he set himself a good target. I mean, if we get towards that number, then I mean, we should know it's coming. But
Yeah.
if we don't get towards it, then it's fair.
Then we should be fine.
Yeah.
Interesting. Okay, couple minutes. Okay, real quick. Since Ayo's giving me the air traffic control signals, then there's a jam question somebody asked on Twitter here, and this is flowing from what we're just talking about now with interest rates based on OMO and so on. What's the best return one can get for 1 million naira in 30 days? Now, I'm sorry, I'm going to have to throw this to you, but I guess, you know, and this is an individual who was trying to do at least above 10% or so. What should one be looking for? Is that even possible?
I mean, I would always say that in this kind of scenario, you'd always want to understand the person's risk profile because I mean, higher risk, high return, higher risk. So if you want higher returns, then you should
have to be ready to
take risk. But most people tend not to have an idea of how much risk they're willing to take. So maybe probably a sit down with a financial advisor, have a more deep discussion, then we can
and then go from there. Well, as far as investment options now, with where rates are, it's so essentially are we being forced to take more risk with where T-bills are and everything. Yeah. So equities, people should be looking at people pretty much have to now start looking at the stock market with dividend yields and everything to get their returns.
You have to explore alternatives from
elsewhere. Lagos, you heard it there. Wale, we gotta have you back. We gotta have you back. Wale Okurinboye, head of investment research at Sigma Pensions. Thank you so much for joining us. Very insightful discussion. Lagos, are we good? Are we good? Yeah, okay, with thumbs up. Thanks for tuning in. Business Express, Smooth 98.1 FM. Keep it locked. Fresh Slippers coming up. What? 7:45, 8 a.m. Okay, 7. Now I'm playing with you. 7:50. See you guys.
Bye-bye.
Business Express.
Solid.